I'm seeing this mistake over and over again. So if you're pre-approved to buy a house, if you're currently looking to buy a home or doing so in the near future, watch this video. I want to avoid you making this mistake, a bunch of pain and heartache that you can avoid. Stay tuned. All right, Matt, the mortgage guy, residential mortgage broker, licensed in 48 states, powered by You Mortgage. In today's video, I want to talk about a mistake I continue to see, and I want you to avoid this mistake if you're pre-approved to buy a home, thinking about doing it in the near future. It's something that people don't talk about, and that's why I wanted to make this video. If you want to connect with me and my team, go to greatmortgagebroker.com, fill out the quick form. We're happy to help. So the idea of this video is pretty simple. People have their assumptions about how a mortgage pre-approval works, and I don't think enough people talk about how they really work so that you can be prepared as a buyer. Or if you're a real estate agent partner watching this, you can help inform your buyers and make sure that they're prepared. So a mortgage pre-approval, as most people understand it, you connect with a loan officer, you do an application, you upload supporting docs. The loan officer says, congratulations, you're pre-approved. Here's your pre-approval letter. It's good for a $400,000 purchase. Go knock yourself out, have fun home shopping. Let me know when you're in contract. What most people tend to overlook is the fact that the mortgage pre-approval, it doesn't necessarily have an expiration date, but it also, can change. Things can change, meaning not just on your side as the borrower, where your credit score goes down, because you miss a couple payments, or you get a pay cut at your job, or you start getting paid differently, or you change jobs. All of that, hopefully, enough to know that if any of that stuff changes, the pre-approval letter is based on today's information. That's what a pre-approval is. A lender saying, based on everything that you've given, that you've shown today, we could get you approved with this loan up to this amount, right? But if anything changes, that pre-approval is null and void. And so what I see a lot of people doing is they go and get themselves pre-approved, and it's a set it and forget it. 3 months later, 4 months later, I see people writing offers 6 months after getting pre-approved, and they haven't spoken to who they were pre-approved with 6 months ago. Now, that's crazy. What can you do to avoid that? You can stay in contact with a loan advisor, a loan officer, loan professional, loan broker, whatever they want to call themselves, right? The person that you've entrusted to get you the home loan is going to issue you a pre-approval letter. You stay in touch with them. Maybe 4 weeks have passed, 6 weeks have passed. They can just ask you a couple questions. Have you taken on any new debt? Have you, had any change in how you got paid? For a lot of people, I'm going to say, yeah, you know what? You work for the state of California. Your pay is exactly the same. You haven't taken on any new debt. You're all good. Continue to home shop. Rates are about what they were 30 days ago. Rates is another thing that has tripped people up. Rates are rather volatile. If we know in our system, and as a lender, I can take all your information today and I can plug it all in. I know exactly what you make. I know exactly what the debts are. There's a debt ratio that is your income versus your debts plus this new mortgage that you're applying for. We plug that into a system. It's an automated underwriting system, out spits and approve eligible, meaning we could get this loan done. Here's the problem. Rates change every day. So if 4 weeks pass, rates have been rather volatile. In some 4-week periods over 2023, we've seen rates go up by 3/8, 0.5% in interest rate. What does that do to your approval? It can pretty much make it null and void. And a lot of people are bailed out or saved by the fact that, okay, rates went from 6.25 to 6.75, but no worries. You've got an extra $4,300. We can buy the rate down to 6.25 if the ratios are tight and you barely qualify, so that you still are able to buy that home. But for people that might not have the extra money to buy the rate down and the rates go up and they've already got in like debt to income ratios that are really tight, that are barely qualifying, all of a sudden you don't qualify, right? And so these are the things that I'm seeing day in and day out. People don't understand. They think it's I'd like to get pre-approved. Here's all my stuff. Okay, you're pre-approved. Here's your letter. This letter isn't a magic token or ticket that you turn in at the end of your home shopping experience when you've got a property in contract and say, I'd like to redeem this for the $400,000 loan you promised last December. It's just not how it works. You need to stay in touch, stay in contact. Any loan originator worth their, what's the saying? Worth any, I don't know, their weight in gold, chocolate, salt, I don't know how it goes, is going to be happy that you're staying in communication, happy that you're asking questions. Hey, I just wanted to check in. Am I still good to shop up to 650, 675? What has happened in the past is based on all the stuff we've got, you know what? Rates have gotten a little bit better. You're actually good up to about 700 until things change. And then, you know what? Rates have gotten a little bit worse. I'd keep it under 670, right? Because good loan originators are going to have a little bit of buffer room, right? So that when you go out and you get yourself into contract at 675, there's a little bit of massaging that can be done to make sure this loan file still approves. But with people testing the limits of what they qualify for in this environment with higher interest rates and affordability being an issue, it really pains me to see people either disappointed because they just didn't know, right? So if you're a consumer, know that things changed. Stay in contact with your loan originator. If you're actively shopping for homes and you haven't talked to whoever you got pre-approved with in a few weeks, shoot out a quick email, make a quick call, shoot a text message. Just wanted to confirm I'm still good, right? The lender and the real estate agent and the client should be actively communicating, especially when there's offers being written. The best real estate agent partners that we have with my team are not only communicating before offers are written, they're CCing us on the offer. They're having us reach out to the list side. We've got a full file. We're ready to roll. And there's no question. We know we can get this loan done. What I see done, and this is the whole reason for this video, is somebody's got a pre-approval letter. They talk to the real estate agent. The real estate agent goes out and submits an offer. Nobody's CC'd. Nobody has any idea. Congrats, we got it accepted. And then somebody that we pre-approved 7 months ago says, I'm in contract. We're ready to roll. As a consumer, you want to know. You want to know what's going on. What do interest rates look like? What is my payment going to look like? How is, my approval? Am I still good? So that's the message for today. Hopefully this helps somebody. Hopefully this saved somebody some pain. I appreciate you watching. I've got 700 or 800 videos on here. So go click around, check out some others. If there's something that I haven't made, a topic that you'd like to hear discussed, go ahead and leave your comments below. I'm happy to make that video. Thanks for watching. And until next time, we gonna see.